So the main topic today was actually what we want to do. Hi, first of all, let me introduce myself. My name is Volker. I'm basically running the monitor here, but I have Dion here, who is basically the mastermind behind it, who tells me what to do. And he's the guy who developed the software. So he should know a few things more than I do. And so I'm glad so many people showed up for this advanced class because we have interesting topics here, things that I've never done, but they worked and they were very interesting. So the first thing I think we wanted to do is importing signals or traits into WellSlab. Is that correct? I think that was Michael's wish.
Yeah, we did have that suggestion from Super Ticker on the forum about taking one of the strategies from Wealth Signals and taking the trades and importing the trades into WealthLab and showing how to do that. So we were able to export some of the trades from one of the Wealth Signals systems that we run called Crystallinity. And we imported them into a trade history strategy. So I think maybe Volker, maybe we should recreate that strategy. What do you think, to show the process?
Yeah. So we do this. Basically, what my thinking was, how it is. I mean, I think that was the original plan. You can download all your signals from a broker, or your trades from a broker, and then import it into WellSlab, and maybe even find indicators or parameters that would basically mimic your strategy that maybe some of you were trading without knowing that you have a strategy. So what we did is, let's just get started here. We actually, and I did it just a few minutes ago, and I have to do a new strategy from trade history. That's the first thing.
Right.
So, yeah. Am I right?
Yep. So we're creating a new strategy of a type of a trade history. So this will let us import a list of trades from another source, some kind of file in some kind of file format.
Yeah. And then I go, where did I find that data? I mean, I know I found it.
So why don't you click on where it says ASCII files, because we have a number of different ways to bring in this data. You can use ASCII files, you can use collective twos format, you can use our format of if you copy the positions out of our positions list, and if you install an extension like Interactive Brokers and I think TD Ameritrade, if you did install those extensions, you would see other kind of parsers here, one for IB and one for TD, that let you bring in the trades in their formats. So, but what we'll use is just the ASCII files, because we have an ASCII file containing the data.
So what I'm doing here, I look for the place where it is. Can you see that window that opened up?
Yeah.
You can see it. Okay, so here it is. This is the file that we downloaded. We see it here immediately. You know, the format of the date, what it was, buy limit, and so on. Quickly say open, and then we get this error message because it actually says the date format is not recognized. So what we have to do is go here and change the date format. First of all, it's it's November, it's day, months, and year. So we go by day, months, and year.
It's actually month, day, year. But the trick is, I mean, here we have MM/DD/YYYY. It's not going to recognize that because it's using single digit dates. So you can also type in a format here. So what we need to do is change the format to M/D/YYYY.
Mhm.
And so
And then we
that's
go
that's our correct format.
Yeah. And then we say it's a comma delimited. So and now what we have to look at is the action. What we want to put in. Actually, shouldn't it show the correct months now?
Well, let's take a look at the file. So let's look at what fields we have in that file, first of all.
Here we are. So we have the date, we have the action, we have the order form, was whatever order it is, the number of shares, and the symbol and the price.
Okay, so the date and the action, and the next one is the order type.
Yeah, order type.
So since we don't use order type here, why don't we just add a filler field just to kind of take the place of that order type? And then let's drag that up.
Action filler. And then we have the number of shares.
Quantity. So quantity, yep. So drag that next.
Mm-hmm.
And now you could see we have our data appearing in the left.
Yeah, we see all the data already here. We see the symbol.
Now that we got the format right, it was able to read all those lines and parse everything out into the list of trades.
Yeah. So then what we do is we transform it into a strategy. So we take the 1st of November in 2018. That's when we start our strategy. We changed our benchmark. We actually looked at it before and we figured out that 140,000 is a good starting capital. It ignores everything else that you have here. So it's not using it because it gets the position size from that file here. And I think that was about it.
I think so.
So what we can go here, we say run the back test, and it's running it. And here we have our results. I increase the window. So you see $82,000 profit, APR 14.47%. Those are the numbers that we easily get here. No NSF positions. So the equity curve looks nice, pretty much a little bit like buy and hold. I would think that the drawdown is, not so good. But it's basically mimicking the...
Let's look at the positions. So this is interesting. We took a list of trades that were exported into a file, and then we brought them into Wealth Lab using this trade history strategy, and we're able to analyze the results just like any other Wealth Lab backtest, using all of the tabs, all of the visualizers. We could see the trades, we can see them on a chart, we can, if you, for example, have a file of your trades exported from your broker for your year 2021, you could load that into Wealth Lab and analyze your own trading for that year. It's a pretty interesting feature.
Yeah, this is a feature that I really like too. I can basically go through all the positions here one by one and have them displayed. And Dion, there was another button here where I could go left and right.
Well, that was the signals.
Okay.
But this kind of strategy won't generate signals because it's only looking at historical trades.
So we go back to the back test here. So this is really all it took to import those trades. And I think we open it real quick up for questions in case people have questions right here.
I just wanted to say thank you for demonstrating this. This is Super Ticker.
You are Super Ticker.
Mark.
Yeah, hey Mark. Nice to put a voice to the name.
Well, I've never seen this done before. This is quite interesting. This is a great demo, actually.
So Super Ticker is Mark here. He's one of the very active members on our forum. So it's nice to finally chat with you.
Yeah. Yeah, I mean, I've never done that before too. So Dion was basically, before we started the webinar, Dion was running me through this. And as I said, and in a team meeting about half a year ago, I said, if you can get all the trades of the big hedge funds that make all this money, some of them do, you could probably run it, and then you have them here, and then you can say, so, and then reverse engineer it, which we are not doing here today, but something that we did. Or are we doing it today, Dion? Are you reverse engineering the trades?
No, we're not. We're not going to try to reverse engineer the trades. We could take a quick look at that analysis series if you want, though.
Yeah. So this is the analysis series. Yeah.
So this is one of the. So each of these tabs here that Volker's clicking through, those are Wealth Lab performance visualizers. So each of them shows the performance of the strategy in a different way. So we've got the equity curve, the drawdown, the metrics report. This one is analysis series. So it lets you see the potential effect of filtering the trades by another indicator. So we default here with the analysis indicator is RSI 20. And so what we're seeing here on the bottom is and the metric we're looking at is profit percent. So we're seeing how the profit percent of the strategy would have changed if we would have filtered it to only take trades that occurred when the RSI 20 was less than a certain value. So, and interestingly enough, if we would have filtered and only taken trades with a oversold RSI, this system would have actually done worse, because we could see these red bars here. So the average profit would have been quite a bit less. Volker, maybe we should change that to that is profit percent. Okay. So average profit percent for positions where the RSI is less than a value. So
if in principle, what it says is there's 10 trades between 20 and 25 where the RSI 20 was below 25, between 20 and 25. Right, Dion?
Right. And so with your German settings, it may look a little bit, it looks like it's negative 2,800, but it's really negative 2.8.
Yeah. We use commas.
Yeah, because that threw me for a little bit. I'm like, how could the profit percent be negative 2,800, but it's negative 2.8.
Yeah. So if that guy would say, I only take the trades where the RSI is above 40, all of the trades would be all profitable. So if he would have applied this filter, I'm not saying he should do that. He might have good reasons for not doing it. And we only look at 4 years of data anyway. So, but let's just take look at this number. So there were 10 trades where the RSI 20 was below 20 and 25, and the average profit or the average loss was 2.89. So if he just filters this trade out, these 10 trades out, he already has a much higher profitability. So this is what this analysis series is doing. I find that really interesting. So that quickly gives you an idea of, and it's hardly ever that clear, I think. I don't know whether you've seen that, Dion. But
no, I did play around with a couple other indicators. Why don't you change it to ADX?
Yeah.
Can I ask a quick question?
Sure.
Yeah.
So yeah, I've been intrigued a little bit by this. So thank you so much for walking us through, Volker. And my question is, why would we use RSI 20 and not typical, parameters with the indicator, like a 14, for example?
Oh,
And I've watched other indicators. I mean, they all seem to default to 20. Was there a reason for that? I'm just trying to learn.
The reason is that 20 is roughly 1 month of trading days. I mean, that's really the only thing behind it. I mean, we could change the period here. So if you click on that little gear, we can change it to 14, or we can use whatever period we're interested in. So yeah, it's definitely under your control.
so you've seen we changed it to 14, and you can control it. And yes, in the books they always say 14. I know that, but that's really, a lot of the times these books were written when there were no computers and they were not doing real testing. When we change it to 14, and you see now there's still 10 trades, and the average profit is, the average loss is now gone up to 3.2. It changes it a little bit. In this case, I think the most important thing is lower RSI are not good for the system. So that's it. And there's no reason for us using the 14 or the 20 over the 14. It's not like we found out that this is the magic number, because there is really no magic numbers in general.
Thank you.
Is the magic number here to use a RSI of 45? And if you use a RSI of 45, you're now going to get a profit most of the time?
Well, yeah, if we don't know the code of the strategy, but if one rule would be, whatever his rule is, if he then would say, if RSI is above here, in that case, 35, he should, all these trades should be gone. All these losing trades should be gone.
So we can change the less than to greater than.
Oh, we can change it from less to greater than. Here you go.
So yeah, you can see that in the beginning, if you do apply that, the average profit does kind of creep up little by little.
Yep. So where do you, sorry? So if the RSI 14 is above 15, you only have an average profit. What is this? Average profit of 0.8?
So it's interesting. The best result is when you take the trades where the RSI 14 is greater than 65.
Yeah.
But there's only 16 trades there, so it's not a very statistically significant sample there, but it's kind of an interesting result.
Yeah, it is.
But yeah, this is what you can do with this tool. You can analyze the effects of different indicators on the results and kind of test out different filters.
Yeah, one that I like is the rate of change. Rate of change. Here we go. Let's make it this way. So this is also interesting, because you see this clear number.
Well, that's a clear relationship.
Is it? So if rate of change is minus 40, so if the stock dropped 40%, there's one trade and you had a profit of, let's say, close to 9, and goes on and on. And if it's profitable, the results go down, but the numbers are going.
Yeah, that's the number of trades that fall into that bucket.
Yeah. So the lower it is, the rate of change, the higher the profit becomes.
Yeah, so that means that they're reverting back to the mean, kind of. So if they make an extreme move, then chances are, they'll kind of bounce back toward that mean price.
Yeah, let's take a week. Interesting. Yeah, those are the interesting numbers that you can basically see here. I mean, obviously, the bulk of the trades is around here. And then there's some outliers here and there, but a lot of them here. So that's just the analyze series that you can use. Okay, so other questions. Mark, you were the guy who wanted to see this trades.
Guys, a little question. Robson speaking here.
Yeah.
Sure.
Man, first of all, great work, man. Warfly 80, amazing. I was playing around yesterday. Man, what would be the reference for the plot, for example? How do you know that you are improving on the strategy? Because, for example, you are showing the profit percentage, but I don't know, for example, if I improve the strategy or not, because I don't know the profit percent of the strategy. Maybe, for example, a line of reference in the chart would be nice. I don't know. Because first, can you understand the question? Because I don't know what exactly the profit percent of the strategy. Then I don't know if I improve or not the strategy. Changing the parameters.
I didn't get, Dion, did you get that?
Well, he doesn't know what the profit percentage of the strategy is.
Exactly that.
Yeah.
The profit.
Oh, you can see here, because for example, if you align now would be great, man, because you can compare with in the charts.
The average profit percent is.
Oh, now I know. No, okay.
Okay, but what we're looking at in the other tab is the profit percent of each of the trades, like all averaged together. So if you want to look at Volker, what you want to look at in the metrics report is the positions average profit percent. Yeah, so you had it there, 0.85.
Yeah, that was the one.
So that's the average profit percent.
Okay, this has been our benchmark for the average.
This is with all the trades. So now if we go back to the analysis series, let's see. So yeah, if we only took the trades where the rate of change 5 was less than -20, the average profit percent would have been 6.85. So that's quite a bit higher than the 0 point. And you could see at the end, always at the end of the graph, it'll converge to that 0.85 because it's now taking all of the trades. So the last one is 0.85.
Okay, thank you.
Yeah, this is basically taking all the trades on the left. This one is basically saying it's a rate of change of the last 5 days, I think, is below 25, where we only had 3 trades, and I cannot see the number here by myself, but
it's -30 something.
Yeah, negative something. So
or no, -3 point something. It's like -3.
Those were the 2 trades, I guess. Here, those 2 trades. I think I can zoom. Yeah, I can zoom in. Those 2 trades were where it was below. No, I have to go a bit further. But these 2 trades were below, lower than 25, and they make -3.6% or whatever that is. So if you would say, if rate of change is above 25, you only get those trades, and would skip these 2 trades. So
right.
So
however, if you would have opened it up a little and taken the ones that were -20 instead of -25, then you would have got these profitable trades that were above the line, those 3 there. But yeah, I mean, these are all, kind of, they're only a handful of trades, so they're not really, that statistically significant. So, we usually want to look for things with a little bit more observations.
Yeah, but the outliers happen, the black swans happen, so those things are there for real. And just like this -50% here is for real too, for sure. Well, I'm not sure, we have to analyze the trade, but it is definitely possible that you lose 50% in a trade.
Yeah, I mean, it's possible that it could have been a bad data, on Wealth Signals or Wealth Lab. I mean, if you go to positions and sort by percentage profit and get that one, you'll be able to take a look at it and see.
Yeah,
No,
that's a
it
tool.
was, yeah, that was a valid trade. So that's our biggest loser right there
Boy.
for crystallinity.
So that's the big loser. The data is correct, and that's what I always recommend. Look at the individual trades. I mean, not only the losers but also the winners, and so that you find out whether those, if there's a big gap, maybe there was a split not applied or anything like this. But this one seems to be also legitimate. Very, very, very interesting. I mean, it's very, very interesting to see this one here, for example. Now, where's the negative one? Yeah, Boeing. Yeah, very interesting. All the trades. Very cool feature, I think. And I wouldn't know how to reverse engineer it. But it's an interesting.
What do you think, Mark? How would we reverse engineer something like this?
Well, I think what I would do is try several different indicators and see which indicators have the highest correlation to predictability in terms of, percent profit.
Mm-hmm.
And when you get the highest percent profit for the right particular indicator, then that would be what you should be using in your strategy. Yeah. Is there a way to page through the different indicators in a kind of a batch fashion and have it spit out which indicators have the most significant results?
Currently,
Mark,
no. But that could be an interesting
question.
Yeah, it could be an interesting thing to add. Sorry, go ahead.
Yeah, no, just adding to Mark's question. And as you browse through the indicators, how do you establish what parameters to pick for your correlation test, right? How do you go about that?
I don't think there's an optimizer that will optimize the parameters for each indicator. There's no optimizer involved here. You just have to, by guess and by golly.
Just take a standard value from the book and try it out.
I probably would think that the evolver or something like this could help, but I think there's no feature in WorldSlab right now that allows you to say, here are my trades. What indicator shall I use to make it work?
Yeah, we don't have a tool right now that will, kind of try to match, some indicators to like a set of trades like that. Be an interesting idea, but yeah, currently we don't have anything like that.
Well, what I usually would do is eyeball it and say, do I see a pattern here? And, if I go through it, I think I can see some pattern, but I think it's a combination of several things. Let's put it this way.
Yeah.
So, it's not only price action. There must be a filter or an indicator in it too. So that's how I would, I would try to eyeball it. I know, that might be interesting, but I think I didn't download that one, the pattern box kind of thing.
The chart patterns extension?
Yeah, the chart pattern extension where you basically can say, have you guys used the chart pattern extension? That would be interesting to see whether that would find something. But it seems to have a certain pattern here. And I'm not trying to reverse engineer someone else's strategy here, but from looking at
to me it looks like it's buying, when things, take a very sharp drop. Just eyeballing it.
Yeah. Here's a sharp drop. There's a sharp drop. There was a sharp drop. So it's basically like probably and as I said, I don't want to revert, take someone's system apart, but I'll probably say if the average true range is higher than something and below something else. That's just my guess.
Mhm.
But that's just me. And then, if you wanted to reverse engineer it, if it would be worthwhile, I would probably try and sit and do it. But I'm not convinced yet. The results aren't outstanding. I mean, they're good. I think they're interesting.
Yeah.
But
So what do you have next for us, Volker?
something that I was actually doing was, and that was something I did for the first time, and I have it basically finished because I published it on Quora. And that was actually very interesting, I think, at least for me, because I was someone was posting a strategy on Quora, and he wrote it basically in plain English, and but he was using something that we didn't have in the blocks, in the building blocks earlier. So he was saying if close is greater than, or in any market, if close is greater than the moving average, 100, and the 200-day moving average of the underlying index is below the index. So if the price is above the moving average of the index, and then he says, and the market is down 5 days in a row, the stock.
Okay.
I did find that interesting. And what I didn't know, or I did know, but I forgot, is that you can use an external indicator on an external symbol as a basically filter. So, and this is called the symbol indicator, I guess, or what is it?
It's one of our what we call transformer indicators. So these are indicators that take another indicator and transform it in some way. So this one actually takes an indicator and uses a different symbol other than the one your strategy is running on as the source data. So here we're taking the SMA 200 moving average, the 200-day moving average, but not of whatever stock or whatever ETF that we're running, but of QQQ.
So the action is basically the closing price has to be greater than the 100-day moving average.
And that's the closing price of whatever stock or ETF we're testing.
Right. And at the same time, we have the moving average, or the closing price of the Qs has to be above the moving average. He actually said it the other way around, and that's why I coded it the other way around. So it has to be above. The moving average has to be below the closing price. That's how he said it. So, and you can see it. It's actually nicely done. It could be anything here. It could be any of the indicators that we have. So I took the moving average. So that's actually quite interesting, because something like this to code for a program, I mean, for a non-programmer is very, very difficult, in my opinion. Dion would say he codes it quicker than I drag it, but yeah. So, and this is it. And then I said 5 down days, and he said close if the price crosses over the 7-day moving average. I haven't optimized it. I just let it go like this. And this is quite interesting, because I did run it on, what did I run it on? Well, I did run it on this one too, but this would take too long.
The Russell 1000?
Yeah, well, it doesn't, it's actually quite fast, but don't want to waste anyone's time. I usually like the NASDAQ. So from 2000 until today, 100,000 starting capital, 2%, basing my position size for today on tomorrow's market open. This is what it does. It's basically, it's not peaking. Some brokers allow you to say, buy that stock for $5,000, instead of saying, buy 500 stocks. And then if the order doesn't, if you don't have that much money, they reject the order. So you basically use the open so that you don't get rejected trades in case. And yeah, and then I run it. And you can see here, it's not only the 307 symbol, but it's using, it's not only using 100 symbols, but it's using the survivorship bias, taking it away. And we get a result.
we talk about that in our previous webinar. If anybody curious about why the NASDAQ 100 is needing 307 symbols, you can check out our previous webinar video, where we explain survivorship bias.
Yeah. So what you can see here, I mean, immediately that's something that you can see. The dark gray is how much you are invested.
I can see that you need to increase your position size.
Exactly. That's what I wanted to say. Yeah. Because, you look at the system and you say, oh, only $20,000 profit, nothing, but then you can see the exposure was only 3%. So there weren't that many trades. So what I do is I go back and say, use 10%. I probably get a couple of NSFs then, but I'm willing to live with that. And it's running, yeah. So here we go. Actually, it was quite good on the Russell 1000, I think. And here we are, another, profitable system. And keep in mind, it's using the Wells data. So that's
yeah, it doesn't look bad. The drawdown is quite low.
The drawdown is extremely low. And what I did write on Quora is, survivorship isn't that important, because one of the filter criteria here is the closing price is above the moving average. And usually a stock does not get out of the NASDAQ if it's, above a 100-day moving average. So that's usually quite a, criteria. Plus, and something that I did see as well is, and I'll show you real quick, is in the period where the market was going down, it basically hardly bought any stocks. You can see here, it was not active because the stock market was going down a lot.
Yeah, because of the moving average filters.
Because of the moving average filter. So it was not taking the benchmark drops here, but was coming back in. So that was a strategy that I did do just today. Yeah, you guys have questions before I talk a little bit more about that, because I wanted to show you something, but go ahead.
Hey, Volker, can I be heard?
Yes,
Sure.
you can be good, yeah.
Great, great. Hey, Volker, nice to see you again. And Dion, nice to meet you. Volker said that you were a genius coder the last time him and I spoke on Friday. But here's my question for you guys. So I like this transformer indicator that you guys are talking about, this symbol indicator right here. Can that be used to alter position sizing?
So give me an example of what you're thinking.
Okay. Okay. So let's just say, for instance, the index, the price of the index is below the moving average. And let's just say, for instance, your original position size was 10% of equity. But now what you're saying is, all right, if it's below the index, I want to change it to 5% of equity.
So no, so you wouldn't be able to use this indicator to do that, but the way to do that would be to use a position sizer. It's another extendable component of Wealth Labs architecture. So the position sizing options here, Volker has percent of equity selected, but if you drop that down, one of the options is advanced position sizer, and then if you drop down the one below that where it says control drawdown, right under position.
Okay, yeah.
So these are like all of the advanced position sizers that we have in the core product and in the Power Pack extension that he installed. So the way to achieve what you want to do would be to have kind of a new position sizer created that contains all of the logic that you want, based on, what the, whatever symbol is doing. You could even make that a parameter. You could, set this up with a number of different parameters, and then it would appear here in this list. And then you would be able to select this as your position sizer. So definitely possible. It involves, like a little bit of a development of a new position sizer to do something like that.
Gotcha. So let's just say, for instance, I wanted to be able to do that outside of the strategy blocks in the C# code. Would that be possible also if I really wanted to dial it in?
What you would need to do is actually do it in another development tool. You'd need to create a .NET kind of class library that contains your new position sizer. So it would be like some outside kind of development outside of the Wealth Lab environment. And then we'd definitely be able to help you out on our forums with that, or, maybe, some other, someone else on the forum might be interested in, kind of taking that project on. I mean, if I'm not sure if you're a developer yourself, but this is like something that would kind of be required to do outside of Wealth Lab in a development tool like Visual Studio or
Gotcha.
some other similar thing. It's not that difficult or complicated, and we do have it all documented, but it's like a matter of building kind of this new kind of pluggable component, which would then you'd be able to use here in Wealth Lab.
Gotcha. So I'm evaluating your platform right now. As I told Vogue for last week, I'm evaluating it very seriously, and I really like what you guys done with it. As a matter of fact, I've definitely taken notice that how active you guys about like adding requested features, and I think that's wonderful. Really the last thing that's really holding me back personally, and maybe for some of you here also, if you're not already on the platform, is like how open is the platform to where, say, like everything within the backtest results, from the metric report to the equity curve to drawdown curve, like how open is that for me to modify it in like whichever way I want?
Well, these each of these tabs is a performance visualizer. So, I mean, these aren't very modifiable as they are. I mean, however, all of these are pluggable components. So just like with the position sizer, I mean, you or like any other, third party could develop your own visualizers, that would then appear as tabs. So it's very open. The whole architecture, most things can be, added to in a .NET development tool, and we have even a few third parties who've created their own extensions. I mean, we have, if you go to our extensions page on the website and you scroll down, you'll see third-party extensions. We have a number of libraries of things that people have created. So yeah, I mean, this is completely open. If you are a developer or have access to a developer to kind of create these plugins, it's definitely doable.
That is great. That's exactly what I wanted to know. Thank you.
Mm-hmm.
Yeah,
like for example, what you're seeing here, this analysis series tab, this is a visualizer that doesn't even come with Wealth Lab. It's in our Power Pack extension. So it's an example of something new, a new visualizer that, was added after the fact.
Yeah, and I think something you wanted to know last time is you don't have to publish it on the website to have it here. You can use it, you can do it on your own and then include it, right, Dion?
Oh yeah, you don't have to publish it. If you want to create your own, kind of personal Wealth Lab components, you can keep them private. Yeah, there's no reason to publish them.
So while you guys were talking, because I downloaded this data just for the fun, and I was actually using Australian data, if I'm not mistaken. I have to look at it. Funny thing is that it actually didn't trade after 2020. That could be because of my data or because all the stocks there are down. Any Australians here? No? Because if I look at the equity curve, I see that it goes up and now flat. So not sure why. Anyway.
Well, why don't you double click on the most recent position and let's look at the chart.
Yeah, it ends basically, I have the open positions on top.
Yeah, so just double click on one and let's see the chart. So the chart does go to April 11th, 2022.
Do we have maybe the Qs? Oh, maybe it's because of the Qs being below. No, that's only happened just here. I was using still the Qs as the moving average of the Q. So it makes sense that there were no trades here, but don't know why there were no trades in that Australian stock market. But until then, the equity curve looked actually quite good. Because I did test some other strategy with this Australian stock market, and they were actually quite good. This is definitely a bad trade.
So yeah, this is Yahoo data. If it's Australia,
no, it's Q data.
Oh, it's Q data? No. Go back to the chart. And let's look at the status bar. Yahoo Finance.
Oh, why was I using Yahoo?
Yeah, Q data doesn't have Australian markets. Only I think only Yahoo does in the data providers that come pre-installed.
Oh, okay. So anyway, another thing I wanted to show is, but I mean, this was basically just an example that how quick you can change it, and the results look pretty good, and and the drawdown is pretty much low even on the Australian stocks. But hey, this is not considering survivorship, so be a little bit careful.
Guys,
I do have a question.
Oh, sorry.
On optimizing. Sorry, go ahead, Robson.
No, go ahead. You can go. No problem.
Yeah. So as you were suggesting optimizing, I was just going to ask. I mean, I've done a lot of optimizing, but I've come nowhere close to what we used to have in 6.9. The genetic optimizer was, very, very. I mean, it would sample low data, low amounts of data, and come up with amazing optimizations.
Well, have you seen the Finantic optimizers?
I've bought it, yeah.
Okay,
and I've tried SMAC is the closest, and that one even, it's not better than the shrinking window.
So you're talking about a genetic optimizer from Wealth Lab 6?
Yeah.
So who created that? Do we know?
I don't know.
Yeah, Eugene would know, I'm sure.
Yeah, but that one is really amazing and superior to all the Finantic and the shrinking windows.
Yeah, maybe post something on our forum about that, and we can do a little bit of research and figure out who did create that. I mean, I'm not sure if even maybe Eugene implemented it or somebody else. Maybe we can get a version of it going for Wealth Lab 8.
I think Eugene said on the 6.9 forum that the person that created the genetic optimizer is gone. He's not, using Wealth Lab anymore.
Okay, that could be.
My follow-on question was, what then would be typical parameters that we use in Wealth Lab 7, 8 now? I mean, how many runs, would typically give you a sufficiently good sample. I read Dr. Koch saying about 500 runs in Slack and all his kind of fanatic ones. I mean, there's a trade-off, right, between quality of optimizing and amount of time you let the computer run.
Well,
what's the experience here?
I wouldn't, I would never like optimizing. I call it parameter stability testing. That's what you want to do. And if I would use any kind of optimization, because optimization is so dangerous, you can optimize by symbols or markets or whatever. So if I would use this exit optimization, and I will make this make it optimizable, and I call it 1 to just to make it short. And I say okay, and then now I go to the no, it doesn't pop up here. Okay, 1 point. Okay. So now I would go to the optimizer, and I quickly want to show you what I would, I mean, obviously, if I run the standard optimization, I get a result, but that's not what you're looking for, right? If you would run all these parameters that we have here, you probably run forever. But then you might not get the best result walking forward. That's why, oh no, I'm running on these 200 symbols. Gosh, no. Can I cancel it? Cancel. I should use something less.
Oh, you're running it on the Australian.
Yeah, and then I ran it on whatever.
Yeah.
So let's see. Do we still have the optimizer running? It's still running.
Yeah, it has to kind of finish up.
Yeah. Yeah, you see here down there. That's on the optimization, but the genetic optimizer, I've never used it. Have you used it?
No.
So yeah, you guys.
It cuts the time in 1/10, or less.
Sorry.
On the 6.9, WellFab 6.9, the particle swarm optimizer works the best. And that's the one I use for 6.9. I think that for WellFab 7, I think the SMAC optimizer is the best one. It kind of over-optimizes to some degree, but I mean, if you don't let it, run for so long, it won't over-optimize as much. But that would be the one I'd use for WellFab 7.
How many runs do you use with SMAC, Mark?
Let's see, total permutations 20. Configure optimization, I got 20 for the iterations. I'm optimizing against recovery factor, random start point 30, function evaluations 1, local search point count 10, random search point count 1,000.
So 1,000 random searches, yeah.
I think, but that one works very well, and it actually works a little too well. I haven't played around with it enough to tweak it, but I think it over optimizes it with 20 iterations. You probably should cut that down.
And did you compare side by side with the shrinking windows?
Say that again.
Did you compare side by side with shrinking windows?
I think they perform very similarly, but I think that the SMAC over optimizes some. The shrinking windows does it about right. The SMAC it'll optimize better, but I think it's an over optimization.
Yeah.
Okay, guys. Yeah. I totally lost you on that one, but I only, this is my favorite, walk forward. That's my favorite. Have you guys used it?
I don't do walk forwards.
I don't do walk forward either. What I look at is the positive slope on the equity curve and unfortunately we don't have any scorecard metrics that actually look at positive slope, so you kind of have to eyeball it, manually. But the positive slope is what I want to make sure that the equity on a stock is going up with time. So I need metrics that are a function of time for the scorecard.
I think
Sortino,
we should be able to add a equity curve slope pretty easily.
like a metric on that would be really helpful.
Yeah.
That would be really helpful. There is a what is it? Fanatics does have a
Fanatic?
a plugin that has a simple linear regression that you can use, and I haven't played with that too much. I'd prefer to have a more complex regression algorithm, but the simple one would certainly be a start. Let me just take a look here and see what it's in the let me look here.
So basically just the linear regression slope of the equity curve.
Right, and the Fanatic scorecard plugin does have a function that will let you do a simple linear regression. It's better than nothing. It'd be nice to have something a little beefier, but
Yeah.
I would prefer a polynomial regression. And for the coefficients on a polynomial, I would take negative powers of x, because that gives you a wider. If you take positive powers of x, it's looking at faster changes, and you really want the slower roots of the characteristic equation. So if you go with the negative powers of x, you're going to get some slower looks. So x to the -2, x to the -1, of course, x0 is your intercept, and x to the first would be what I would use for the polynomial.
Okay.
Have you compared the Sortino results with the slope of the equity curve, Mark? I think higher Sortino.
I've looked at the Sortino. That's kind of a spin-off of the Sharpe ratio, but those are z-scores. Okay, they're looking at the z-score. It's not a function of time. There's no function of time there with the Sortino.
Yeah, it may be coincidental, but higher Sortinos tend to, also match up with better slopes. I mean, steady slopes, right?
That would be coincidental, because it's not a function of time. So that's just by coincidence. It would be better. I think the Sortino and the Sharpe ratio are really trying to evaluate the strategy in a vacuum, but they're not trying to evaluate how a given stock works with the strategy. For a given stock, you really want to see the equity going up with time. And these scorecard metrics are not a function of time, so they're really not designed to work with Wealth Lab at all. Well, we want a function of time here for the scorecard metrics, so we can make sure that there's a positive slope on the equity curve.
I mean, you want to actually a steady, right? I mean, you want a linear.
Well, it doesn't have to be steady, but it needs to be positive sloping. So there's going to be some trades you're going to lose on, obviously, and that's going to cause a little bit of a dip. But the overall slope has to be going positive, and with time. And all the scorecard metrics we have, with maybe the exception of one, are not a function of time.
Yeah.
So they really aren't designed to compare how well a stock performs with a strategy, because there's no function of time there. And I think that the literature is not really concerned about how a stock performs as a strategy. They just want to take a look at the strategy in a vacuum, which is fine. And I think the Sharpe ratios does that. But if the Sharpe ratio is good, but the equity curve is going down with time, well, I would want to use a stock with that strategy. That's not smart.
Okay. So guys, that was a little excursus, interesting discussion, which, and I think maybe Dion, you got some interesting ideas.
Yeah, let's see what we can do. Maybe we can get a equity curve slope metric by our time for our next webinar. Let's see how that goes.
Well, that would be really interesting. If you could do the polynomial with the negative powers of x, that would be wonderful. Math.net solves general multivariant regressions. So I mean, it has a polynomial solver too, but it won't go below x to the 0 powers. So it only works with positive powers of x. It doesn't work with negative powers of x. But if you but the general solver for regression, you can put whatever you want in there. So if you want to, the code that I've used for my own strategies uses a polynomial with x to the -1, x to the 0, which is of course your y-intercept, and x to the first. And that works well for most of the fitting I do. And I'm just using the general linear regression solver on the direct one on math.net, and it works super.
Well, let's take this to the Wealth Lab forum, and maybe you could post some sample code and kind of give us an idea of how this might be implemented, and let's see what we can do.
Well, I can post some sample code of the polynomial I just described, which is x to the -1, x to the 0, and x to the first. Is that of interest to you? But yeah, I would add I would add another column to that. I would add an x to the -2 to that matrix, that system matrix. I wouldn't stop with x to the -1, but that would certainly give you a fit that is not bad. The other thing to look at or consider is Wealth Lab has a regularized EMA, and that's a good fitting algorithm too. Now, I'm not really sure if the equity curve is really a time series where you're gonna fit it to a difference equation and solve the coefficients for that difference equation. But the regularized EMA, and EMA is solving a difference equation. It's it's a one-root pole. Would be one way to fit it. And the regularized, you get a few more parameters because the assumption there is that you're missing some points. So the regularized algorithm is kind of trying to fill in for the missing data. So it's a statistical thing, and it does. I use that regularized EMA in a number of my strategies, and it is actually fairly good at computing a n slope for a strategy. So that would be a consideration as well. But you are fitting a time series. It's not a regression fit, so you got to keep in mind that you're doing a time series. I think if you just did the regression fit as the first try, I think that would be it would better than what we have now.
It'll be a good step in that direction. But
because what we have now is basically a lot of scorecard metrics that aren't a function of time, so they're really not designed to to merit how well a stock matches to a particular strategy. And so there's that's what we need, is we need a way to match up with stocks with strategies. So we need a function of time scorecard metric.
And that's what I love about Wealth Lab. There's always more things to add and explore. So I'll never retire, and that's the good news. But I think we're kind of coming to the end of the time for this one, right, Volker?
Yes, absolutely.
How do you want me to post the code for Matt.net's polynomial fit? Do you want me to just email it to you, or post it on the forum, or what?
What do you think? I think the forum would be good. Maybe other folks could then chime in, or it could be good to share.
Yeah, it would be
that.
nice. A GitHub repository as well. You can put in a GitHub repository. It would be nice, man.
Okay, I prefer converting it to vector and matrix data types, because that's what math.net uses. Is that going to be a problem for anybody, or you want to stick with a single dimensional arrays? I think doing it, because when math.net solves it, it's going to eventually convert it to its native data types anyway.
Yeah, well, we'll do what you think is best, and let's see.
Well, I can post it two ways, but it will accept a multi-dimensional array. But I think that converting it to a matrix and a vector make more sense, because that is the native data type that math.net uses. You have to keep in mind that when you're doing numerical analysis, you have to worry about principle of locality and getting all the numbers into a tight spot, and having it into its matrix data type actually puts it all into a how should we say, a contiguous data format in memory, so it can work with it efficiently.
Got it.
I think best. Do whatever you feel like is the best, and then if Dion needs more information, he'll probably contact you, and others can actually come in and talk about it too. So
I'll post the matrix vector solution. Now there's going to be a bunch of steps where it's going to have to put it into that data type from the data type that Wealth Lab is familiar with. So there's a few extra steps in there. I hope you don't it's a little confusing to figure out the first time, but once you figure it out, it's not that much of a problem.
Sounds great. Cool. Thanks. All right, guys. I think that's going to be a wrap for today. Volker, thanks for hosting this.
No, you were basically the man.
Yeah.
But yeah, hope everyone could learn a little bit and see a little bit. And thanks for coming. Thanks for joining. And we try to continue it once a week, twice a week. The more people come, the more we diversify it.
Sounds great.
Thank you,
guys.
both. Thank you.
Bye, everyone.
Great.